Okay, good afternoon from the Solomon Islands. So my name is Caleb Pollard. My student ID is S111-45908, and my teaching major is economics. And the date today is the 15th of October 2021. So my substrand for my economics class, year 12, is macroeconomics. So for today's learning outcomes, students, I'm hoping at the end of this instructional learning video, you will be able to learn to calculate GDP using the income and expenditure approach. So you guys will be given some work throughout this week to have familiarize yourself with these approaches. But before we go straight into the work, let's have some fun activity to share with the students around us. Since we're in lockdown, I want us to share what you have been up to during the lockdown period. So I want you to post a picture. I have a click on this link here. It should take you to this Word document. So what I want you to do is so you type in your name. And after, post a photo. All you do is insert, go to image, and as you can see, this is what, and write a small description. So during lockdown, I have been taking care of my parrot. Okay, that's basically all you have to do. Just post the picture into the Word document and a small description of what the picture is. Yeah. Okay, thank you. Let's go back to the PowerPoint. Okay, macroeconomics. So gross domestic product, or sometimes known as GDP, is the total value of goods and services produced in an economy in a given year, and therefore it is measured at current market prices. So if you look in the Solomon Islands economy, you have the primary industry, the secondary industry, and the tertiary industry. So for example, we have fishing, we have the palm oil industry, and then we have tourism, which is a tertiary one. And all of these come together and they produce all these goods. And when they sell these goods, the country makes an income. So therefore, what we're trying to find is to calculate the total GDP that the country makes in a given time. So from all that money that comes in from the goods we produce and the services we do. So basically to calculate the GDP, there are two approaches. The first one is income approach, and the second one is expenditure approach. So we'll go through each one, then there'll be some activities for you to do. So the income approach. This method determines GDP by summing all income earned in producing the goods and services in a particular period of time. So it is made up of income earned by people in the form of wages and salaries, profit earned by business firms, net indirect tax earned by the government. We'll learn more about this. So the formula is oops, sorry, that is a mistake. GDP. So GDP is R plus W plus net indirect tax plus depreciation. So R stands for the total income earned from wages, and W stands for the profit earned by businesses. The net indirect taxes equals indirect taxes minus subsidies, and the consumption of fixed capital equals depreciation. These are some terms it would be helpful for you to learn. So when you come to do your activity. So for example, we have a table here. This is US GDP. So you have the item, wages, and all that. You have the amount in 2005 and the percentage. So let's try and calculate the GDP. So what you do is Look at the income approach. As we know, the formula GDP equals R plus W plus indirect taxes minus subsidies plus depreciation. Okay, so we know your wages and consumption of employees is 7,111. So you note that down here. And you know your interest, rent, and your profit, how your net operating plus surplus, or the profit the business makes, equals to 2,953. So that is placed here. Then you have your indirect taxes, less subsidies. So that's already calculated for you, which equals to 847. So that's 847. And then you have your depreciation. Your depreciation equals 1,456. To put that in the formula and you add all up. So if you add 7,111 plus 2,953 plus 847 plus 1,456, that should equal up to $12,367. So we can say that in 2005, the US GDP of US was $12,367. Okay, so that's how you solve it. The second approach, the expenditure approach. So this measures the total amount of spending on final goods and services in a year. This is the method of calculating GDP by adding expenditure on consumption, investment, government spending, and net volume of exports. So the formula is GDP equals consumption plus investment plus government expenditure plus net exports. So net exports is basically just exports minus imports, or X minus M. Sometimes gross capital formation is also known as investment. Now this will be useful for your future references. So for example, we have a table here, US GDP accounts in 2015. You have your items of expenditure, and you have your component. So you have your consumption, you have your government expenditure, you have your gross capital formation, which is your investment, then you have your exports of goods and services, and you have your imports. You have the amounts that's detailed there at the third column. So if we have to calculate, so the solution GDP equals C, which is consumption, plus I, which was investment, plus G, which is government expenditure, plus net of exports minus imports. So if it calculates, so GDP equals to your consumption, as identified here, is 12,272. Then you have, just identified here, you have your government expenditure, which is 2,572. Just measured here. Then you have your gross capital formation, which is your investment, which is 3,632. So that's mentioned here. Then you have your exports of goods or services, your X, which is 2,253, which is mentioned here. Then after that, you have your imports of goods, which is M, 2,782, which is mentioned here. So you just follow that, you add all this together, even the ones in the brackets, and equals to 17,947. Therefore, we can say that the total GDP of the US in 2015 was 17,947. Okay, so those are the two approaches that we hopefully will learn today. If you want to go on a deeper level, if you want to learn more about the income approach or the expenditure approach, or if you get stuck, I have uploaded links to 2 videos which explains the income approach and expenditure approach on YouTube. This would be very helpful for you to understand more about these 2 approaches in calculating GDP. So your activities, I've attached a file that has some questions on it. So the questions are let me find it again. Here it is. So economic social. These activities are to be done by next week, Friday, 22nd of October. So please have time to do it. So you have part 1, then you have part 2. So basically, you have to look at this statistics here of the Pacifica, and you, please be careful. Some of the information here is not relevant. So your first question is to define what gross domestic product is. Explain why real GDP is a better measure of a country's economic growth than nominal GDP. Use the expenditure approach to calculate GDP. Then briefly describe one other approach that can be used to measure GDP. Then after that, list 2 limitations of GDP as a measure of economic welfare. If it gets, please feel free to use the internet to find answers to these questions. And also you have a second table here, compensation, data and details listed in a small table. First thing to do is calculate the GDP using the income approach. I want you to differentiate between the terms consumption of fixed capital and capital formation. After that, calculate what is net taxed. Then after that, you state the formula for calculating GDP using expenditure approach. And then lastly, you list 2 limitations of GDP as a measure of economic welfare. So have a go at these questions. And yeah, see how you go. So a summary, we said GDP, as we learned, is the total amount of goods and services produced in a country over a period of time. And there are 2 ways to calculate this. The first one is the income approach, and the second one is expenditure approach. So yes, so when you finish with your activities, please send your answers to my email, s1114598@cn.usb.ac.fj. If you have any queries or you still don't understand, please feel free to contact me. I also have my phone number there, 6777-12048. So yes, have a lovely weekend and have a attempt at those activities. Thank you very much.